What's up, guys? It's Rey-Jay back with another video. And in this one, I want to break down what's happening with SPY, Tesla, and the broader markets. I'm going to break down what's going on with the economic calendar and what Jerome Powell just said. Also, what's happening with the whole situation involving Israel and Iran as we're getting some more updates. Just know that I am not a financial planner, so take nothing I'm saying as financial advice. And also, if you guys can, please check out my Moomoo link. If you sign up for Moomoo, the link down below, and deposit $100, you're guaranteed 5 free stocks. If you deposit $2,000, you're guaranteed 25 in total. Deposit $5,000 and you're guaranteed 60 free stocks. The offer ends at the end of July, so check it out before they run out. Anyways, now let's talk about what's happening with this market. So, as far as the market's going, looking at SPY, we're technically just range bound. As we hit this 602 to 604 area, we like to get rejected. But as we get back down here around 595, we're getting bought back up. Even today, we held 595 again. So the market does not have much of a direction. We're just completely choppy, completely indecisive. And until we get that direction, we'll be looking for a much larger move. Now, I do want to talk about the risk of downside that's still technically there after what Jerome Powell just said. But like I said before, there's no confirmation of that downside yet. And that's why I'm going to break down some more levels and talk about the news very briefly. So, as a reminder, we got the very important FOMC economic projections. For the first year, this is higher than before, and then the second year has the same thing as well. You guys can see these numbers right here. These are like the new numbers that came out on the left, and then the old ones are on the right. But the current rates and the longer term rates remain the same. But basically, the Fed is implying they may have to keep rates higher for longer again. Now, that's a very, very serious shift in tone because you guys could see that in the beginning, okay, Jerome Powell was actually being bullish. He was talking about how the economy is doing very, very well. The labor market is very resilient. He went on about that. So he was saying some bullish things. And he did talk about how there's been decent inflationary numbers so far. So inflation is still going down. And then on the consumer side of things, we're not really seeing higher inflation. We're not really seeing a big increase in inflation, at least so far. The producer side is kind of like more nuanced, but I'm going to say the consumer side is still kind of flat. So far, good data was coming out. That's why Jerome Powell was bullish in the beginning. The market saw a small pop when he was speaking, but then we got a small sell-off. So basically right here, if you look at like the 5 minutes time frame, when Mr. Powell was speaking, we started off with this little pop, then we got this sell off, then we just consolidated as the day went on. Not much of a massive move as Jerome Powell tends to repeat the same things. But why did the market sell off a bit when he was speaking? And that's because of number one, he is saying that, look, the data looks good right now, but there's no guarantee it's going to last like this because their signals, their research, their indicators suggest a risk of meaningful inflation in the upcoming months. He said this summer is going to be very key, but because of the tariffs and other factors, we're going to likely see an increase in inflation. They're expecting that now, and that was not the best of news for the markets. So we're expecting a surge in inflation. Some people may argue it's going to be very minor. Others may say it's going to be very strong. We'll see about that. But Jerome Powell is being very blunt. We're expecting another surge in inflation very soon as the next upcoming months. So summer is going to be very key. We're seeing lots of retailers saying they may have to increase their prices, which could be affecting their EPSs when it comes to earnings. But that's what he's saying, and that's going to be very important. He's mentioning that when you look at the labor market, it's very resilient. So we are capable of withholding rates at these levels. We could keep rates elevated for longer because the economy is not taking a big hit yet. So he's saying that we're a very resilient economy. We could still handle it. Everything's going to be okay. And we're still projecting growth in our GDP for like a year out. But at the same time, there's going to be a risk of higher inflation. So the Fed cannot cut quite yet. The Fed is also implying that when it comes to cutting, they can't promise an exact date. We're expecting like 2 cuts for the year, but we can't make promises because it depends on what happens during the summer. Are we going to see another surge in inflation? Jerome Powell is expecting that. Particularly maybe next month, maybe in 2-3 months from now, we're going to see a big surge in inflation, according to him. And he's telling us to be prepared. On top of this, Jerome Powell also talked about the labor market, the way in which it's being structured. So yes, the numbers look good right now. If you look at unemployment, it's not too bad. But the problem we have is with the way that our numbers are being collected, it's going to be very, very dependent on what happens with the ability of Americans to get jobs and the ability for jobs to grow. Because when we get our data, it's not just about unemployment, but also job openings. And job openings are what are slowing down a bit. So if you have a slowdown in job openings, let's just say that you have a situation where, you have an American that just loses their job. it's not going to be good, because when Americans start losing their jobs, if that starts happening, which we could be expecting, right? It could take them longer to get another job, to get a job back to replace their jobs. It's going to take longer in the economy to do that. So when it takes longer to get those jobs back, that could contribute to a higher unemployment rate. And there is going to be a risk of that, which Jerome Powell did account for. So he's saying that, yeah, there could be a risk of higher unemployment, not because of the fact that all jobs will be lost, but more like when people slowly lose their jobs, there could be like a domino effect in a way where it takes them longer to find those jobs, right? With less job openings. And then, secondly, the risk of higher inflation. I think that's a little bit more bearish for the markets. He is addressing the fact that, yes, inflation looks good right now, but there's going to be a risk of a big increase. And I want to give every American a warning about that. There's going to be a risk of higher prices. I do agree with that. To the extent I do not truly know, is it going to be a big increase? Is it going to be more minor? We have to be prepared. So please keep that in mind. Besides that, Jerome Powell remained optimistic about the US, the economy, and he also talked about AI, how he's very optimistic about the growth that's coming. And he didn't want to comment on when he was asked about if what he's going to do if his term is going to end soon, because President Trump is saying he wants to replace him. President Trump called Jerome Powell a numbskull. He said that he wants to see 2 points worth of cuts, and we're not really getting that from Powell, right? He's saying because of the inflationary risks and because of what the Fed is kind of like addressing, it's going to take longer than expected. He's addressing the contingencies, and that's the reason why. On top of this, when you look at data as of right now, like I said, consumer inflation on the consumer side, it's flat when it comes to core, still near that 2.8% rate. It's still a little bit elevated, but the question is, are we going to get a big surge soon for like the summertime? That's what Jerome Powell's warning us about. June, July, August, we could be looking for that, especially as crude is becoming more expensive. That's another factor. With the whole Israel-Iran situation, there's been some news that Iran wants to meet up with the White House and kind of negotiate, but President Trump is saying that it's much too late to make a deal just like that. However, he is open to negotiations. There's also been a lot of talk about some risk right now involving this war. The war is still very intense. I would love there to be peace as soon as possible, and we'll see how these negotiations go. But the supreme leader of Iran made it very clear they're not going to be surrendering yet, right? They never want to surrender, excuse me. So it's very intense. The war is continuing, and we're going to see if there's some kind of peace agreement. President Trump mentioned that he believed that Iran was a few weeks away from developing a nuclear weapon. And, it was a very, very, difficult situation to bear. So with what's going on, we're going to see what happens if we do see Iran try to negotiate with the US, if they come to the White House. There's a lot of uncertainty right now. I'm probably going to wait a couple of days to see how this pans out. I hope for peace, but the situation remains very intense. And we're going to see how involved the US gets, if the US does get even more involved, and how long this is going to be lasting. This is it for earnings. Keep in mind that Thursday is going to be tomorrow. It's going to be known as Juneteenth. Very important holiday. There's not going to be trading tomorrow. So the stock market, in terms of like equities and the bonds market, is going to be closed. And we'll be back to normal on Friday. So keep that in mind. The market's neutral, and I agree with that. Basically, none of this matters. Momentum's at fear. The put to call option ratio is going up a bit. The VIX is on neutral. So it doesn't matter, guys, because we're just in the middle. There's no real direction quite yet. Let me show you. When you go to the 4-hour time frame, what's happening is when we dip to 595 to 598, we could even start like down here. So let me actually correct this for 1 second. Starting here, we're at 595. We go up to 606, back to 597, 606, 595, 604, 595, 602. So we are making lower highs. That's not the best of signs, but we also have a flag forming. So we're just going back and forth like this. And that's all we're doing, even after Jerome Powell's speech. So maybe if we get some big news involving Iran, or if something else happens in the next couple of weeks, we're stuck. We're stuck. So if we break the 604 to 606 area, we're going to be looking for a big push for the 610s. But if we end up losing 592, we could be looking for a dump back down to the 580s. My guts tells me we might test 595, then maybe bounce again and continue to trade sideways. But there's going to be a risk of downside if we can't hold support right here, because we are technically making lower highs. It depends. Will the flag pan out or not? I think the setup does look a little bit more bearish, but I think we're going to test 595, maybe see a small bounce and maybe continue to dip. As of right now, we're very indecisive, so we need to wait for confirmation. As a day trader, I don't just trade every single day and just expect there to be good volatility every day. Sometimes you could just sit on the sidelines, wait for that opportunity, be very picky with your trades because that will increase your odds of success. Right? As a trader, that's a very important lesson. And right now, the market's just not in the best of places for very very big trades. We could scalp, we could catch small moves like 2 to 3 point moves here and there as the market shops around. We could still trade. My point is I'm not going like super heavy and expecting insane volatility yet until I see one of these directions break. So keep that in mind, guys. That's what I'm going about, at least for now. Same thing with the QQQ. Okay, when we hit 523 we bounce, we hit 537 to 535 we reject, bounce, reject, bounce, and we're just getting tighter. If we're bullish, you want to see us basically break this 535 area to push higher. If we're bearish, you want to see us lose 525 to start dumping back down. I do see a risk of a head and shoulders. So there's like a left shoulder here, head and right shoulder, but you need to see us lose 525 to start dumping. There's no sign of that yet. As of right now, we're range bound. We're basically going back and forth, back and forth, back and forth. So I anticipate we're going to continue like this. We could dip to like 527.5, bounce back up to 533 and just continue to trade sideways. And then if we break out higher, we're bullish. If we come back down, we're going to be more bearish. There is a head and shoulders setup, so maybe we come back down, but we need confirmation first. Like I said before, wait and see. Same thing with the Russell. I mean, there's the possibility of a head and shoulders. You guys can quite clearly see it. Let me just draw it out just to clarify. Left shoulder, head, right shoulder, and that could lead to a dump back down to the low 200s. But if we're bullish, you want to see us break 212 to push back up. We're just going back and forth like this, not really doing a whole lot. So there's going to be that risk of downside. Until we see a direction break, we're kind of stuck. ES is also stuck here. Now there's the possibility of a left shoulder, head, right shoulder. And if we can't get back above 6100, we're going to be continuing to fall back down towards 59.44. So we'll just have to see how it goes. There's a high here. We came down, made a lower high, and we're coming down. So we're going to see if this dips lower. I think that we're going to be indecisive. We're stuck between 6,000 and 6,100, so we continue to trade sideways. But if we failed 6,000, we could be dumping back down to 59.44, so you want to be very careful nonetheless. On NQ, we have a left shoulder, we have a head, then we have a right shoulder. And if we fail at 21,800, we could be dipping back down to 21,430. If we break past 22,200, we could be looking for a big bounce. Otherwise, we're kind of stuck here. And there's going to be a risk of downside off this head and shoulders. So it could go either way. I anticipate some sideways price action. Then we could be dipping lower. So we'll just have to see how it goes. When it comes to Bitcoin, we're kind of range bound right now. If we break 108,000, we're bullish. And if we lose 101,000, we're bearish. We're just stuck in between, going back and forth, back and forth. So it could pop to 106,000, but then it could turn back down. So we'll just have to see how it goes. For Tesla, we're range bound. So Tesla's getting very tight right now. As you guys could tell, approaching the robo-taxi event, Tesla is scheduled to tentatively launch their robo-taxi on June 22nd. Now, it depends on what happens with Elon Musk and the team. We're kind of stuck right here until we see some kind of direction, but I anticipate that we're just going to get tight. And maybe we get a bounce to the upside. I do hope Tesla tries to bounce with the robo-taxi potentially to be launched, and they're going to do their first commercial ride. That could be bullish, but it depends on the dates and if it truly launches on the 22nd. That's going to be, I think, in just a couple of days. If we get that launch, it's going to be awesome. And then that could lead to a big move on next Monday. So maybe there's going to be a bounce. We'll see about that. On Nvda, there is a bearish divergence. If we end up losing 144, we're looking for this gap fill to 142. And for bullish, you want to see us basically break past 146 to break out higher. We're stuck in the middle of this bearish divergence, so I do think it might just continue to trade sideways between 146 and 144, and then maybe later it does come down to fill that gap. But overall, it's just trading sideways. Apple is kind of weak here. It's technically on a downtrend as it's dependent on China news. For now, it's a little bit more bearish. We're going to see if we break back above 204. Otherwise, we may just continue to downtrend back down to 192. For AMD, it's kind of weak here. I could see a test of 124 and we'll see if we bounce. Look for some downside just to be safe. Coinbase is pushing very nice. We got some bullish news. We have to hold above 300 to remain bullish. If not, we could be retesting 285. So be careful. It does look bullish though. Um, Amazon had the inverse head and shoulders we were talking about, but at the same time, it's very flat. We like to reject off 218 and we like to get bought back up around 210. We're kind of going back and forth. We're going to see if we bounce back up to 215, then we dip back down. So we'll just have to see how it goes. So be very, very patient. For Meta, we have a double top here. 695 is our resistance. If that doesn't hold, we could be dipping back down to 685. On Google, we're kind of trading flat here. If we hit 176, we're going to be going back up. If we pushed here and then reject, we could be turning back down to 170. And then for Microsoft, we're looking bullish. So we're going to see if 480 holds. If it holds, we're looking for 482.5 or above. Microsoft remains more bullish. The VIX is completely indecisive. What I mean is we are going back and forth, back and forth, back and forth. This is all we're doing. So we're going to likely continue to consolidate. There is a risk of it coming down to fill this gap. So could that mean the market's about to bounce? But I just want to say it's consolidating. So there's no true sign of a breakout or anything yet. So until we see it either break the 22s to be bullish or lose the 19s to be bearish, we're just range bound. So that being said, my view of the market is still to be very unbiased. We could break 604 and be more bullish on SPY, or we could lose 595 and turn bearish. I still think we're going to trade sideways. We might dip to 595, bounce a little bit, and continue to consolidate. But there's going to be a big move eventually coming, hopefully by next week. This may depend on what happens with the war news and other factors like that. Jerome Powell, what he said was a little bit more bearish for stocks overall. I mean, he was bullish in the beginning, but then his claims about higher inflation isn't the best. So we could go either way. For now, we're just range bound, so we have to just play the charts in front of us and be patient. As traders, we're going to be very patient and wait for that opportunity. So keep that in mind. Anyways, I thank you all so much for listening. Please enjoy the holiday. Tomorrow, there's not going to be trading. I will still upload a video nonetheless, but I'm just trying to say that, we have a holiday and we're not going to be back for normal trading until Friday. Until then, thank you for listening. I'll see you guys tomorrow and peace out.